Hey guys, welcome back to Upside Down Data. In this video, I'm going to be talking about Zilliqa and why the explanation for Zill's underwhelming price action has little to do with marketing and a lot to do with money markets. If you guys learned something from this video, subscribe to the channel, like the video, follow us on Twitter at Upside Down Data, where we put out updates about the UDPI risk indicator, which is our in-house risk indicator, and more. So a little bit of background here. I'm going to be taking the perspective of user experience. I'm going to be talking about it from a utility standpoint. So what draws people onto the platform? I'm not going to be focusing on the tech. That's obviously important. I just don't think it's the most important thing when it comes to trying to understand why Zill's price action has been underwhelming. So let me start with some things that Zill has going for it, because those don't often get recognized enough, in my opinion. And Zill has a lot going for it. It's pretty fast. If you've used Zill, it's a pretty good user experience. It has some nice apps like ZillSwap here, which you can see. This is the main decentralized exchange on Zilliqa. It has an above average NFT ecosystem, including a ZillSwap run exchange called ARC. And you can see that it hosts a growing number of NFT collections here. It's been doing a reasonable amount of volume. Compared to other blockchains, other smart contract platforms, the Zill NFT ecosystem is not bad. And some of these projects are pretty interesting. Decentralized Monsters is a yield-bearing NFT. Same thing with non-fungible ducks, or Zill ducks as they're called. There's some cool stuff here. It has some other promising projects building on it too, like XCAD, which is a platform for creator tokens, Watch to Earn. It also has Lunar, which is the native token of the Lunar Crush website, which is a pretty influential player across the space. It has Port, which is a shipping thing. So it's getting into the kind of logistics space. There are some really promising projects that have been growing and chose to build on Zilliqa. That tells you something about Zill as well. So what's the problem with Zill, and why am I making this video? Well, the problem with Zill is on the price chart. Here we're looking at the weekly chart, and what you can see is that the price action looks pretty terrible. We had a run up, all the way up to 25 cents here, back when the market was really, really bullish in April. And then when the market crashed in May, Zill came down all the way to 5 cents there by the middle of July. And crucially, it has not recovered. A lot of its peers, a lot of other assets, including layer one smart contract platforms that you would expect it to be trying to compete with, have way outperformed it. I mean, Avalanche came down to $10 and then pumped up to $140. So it did a 14x in the same period of time that Zill has not even managed 2x off of its low. So it's now sitting at 9 cents after bottoming at 5 cents, and after topping in the spring at 25 cents. So that's a pretty unimpressive reaction after that drawdown between May and July. This has frustrated a lot of people. What's the deal with Zill? If Zill has good tech, if we like using Zill, why isn't Zill performing well? Some people bought Zill at the top and have felt a lot of pain as it's retraced, lost money. Other people have just kind of watched their investment go sideways, feeling that opportunity cost build up while they see projects like Avalanche, Phantom, plenty of others that, ostensibly offer similar services outperform it by a lot. So people want to know what the deal is. And what I want to convey to you in this video is that the popular explanation that's really taken on, and that you hear a lot about if you hang around in Zilliqa spaces, is not correct. That's the marketing explanation. And I want to challenge that explanation and give you a different explanation to think about, something that really is holding Zill back, and that improvement in this area could really catapult Zill, and I think really give it a nice boost. And that's a money market. I'll tell you a little bit more about that in a minute. But like I said, if you've hung around in Zill circles at all, you've probably come across this explanation. The idea that the problem with Zill is that it doesn't market well enough. I just pulled up, the latest hits for Zilliqa marketing here on Twitter, just to give you a sense of how continuous this line of criticism is. Did someone say marketing wizards long pause? Because Zill needs help, especially with the American market. So, okay, this person thinks Zill isn't performing well in America because it's not marketing here. Marketing problems with Zilliqa. Here's an article which is positive. Here's somebody criticizing Zill's marketing in Spanish. Here's another person criticizing Zill's marketing. Budget for marketing. One after the other. One thing that has really been coming out over the last week or so is comparisons to Crypto.com, the CRO coin, because Crypto.com not only just launched the Kronos blockchain with lots of DeFi utility and is already drawing people in, and the price has been reacting. Price has exploded over the past week. Crypto.com also bought naming rights to the Staples Center in Los Angeles, where the Los Angeles Lakers play. They've been making other inroads into, athletics, professional sports from a marketing, strategy standpoint. And people are like, when Zill marketing, right? This is what people have really glommed onto as an explanation for what must be going on with Zill's price action. But again, there's really no evidence for that. And it doesn't really make sense, actually, as an explanation. It's true that Crypto.com has, spent a lot of money on marketing, but it's a centralized exchange. And, nobody is suggesting that Zill should buy the naming rights to the Staples Center in Los Angeles. When you look at other smart contract platforms, other L1s that have performed really, really well in 2021, there's really nothing that stands out that's so much more impressive about their marketing than Zill's. Now, it's true that Zill doesn't focus as much on an American market as some of the others do, so let's say like Avalanche. But the world is a big place, and Zill does plenty of marketing, and it just doesn't really add up to say that, the reason that Avalanche has gone, on a 14x run during the same period of time that Zill has only put in about 80% is because of Avalanche's superior marketing. I don't think that's right. It doesn't really make sense. And I think there are other explanations that are much more likely. Again, where does this marketing explanation come from? I think that it comes from a place of frustration, and it's an understandable place of frustration. I have a Zill position too. It's a small position. It used to be larger, but I held a Zill position throughout 2021. I established it in late 2020. So that's in the interest of full disclosure, I'm telling you guys that, but I'm also letting you know that I get it. I know how it feels to watch Zill do nothing while others do something, or even retrace a lot of your gains and then never recover them. So I get it, but asking Zill to spend more on marketing is not the answer. Here's what I think could really make a difference. Zill doesn't have a money market. This is a huge limitation on the DeFi ecosystem on Zilliqa. Let's go back to ZillSwap for a second here. This is, as I mentioned, the main DEX, and you can provide liquidity on ZillSwap for different pairs. Let's say like an SPW, that's Sparta Wallet, which is an NFT exchange, and Zill, so you can provide liquidity on those two assets, and you actually get a pretty decent return on that. I think you might also get some Sparta airdrop to your wallet each week, so pretty decent returns. So you can do that here, and ZillSwap has 50 million locked. That's not an all-time high for ZillSwap. I mean, it's also pretty small compared to a lot of other platforms in the space. And I think the reason for that is because Zill lacks a platform for borrowing and lending, a money market. Let's go over to the best known money market in the space here, which is Aave. So Aave is accessible across multiple platforms, including Polygon and Avalanche. It's got 27.5 billion total value locked here. And basically the way this works is you can come in here with your DAI or with your USDC or with your Ethereum or Chainlink, with your WBTC, your Uniswap, so many different options. You can deposit them as collateral, and you can borrow against them. So you're basically lending them out for interest, and you can also then borrow, and then you can do something with those funds. So let's say you deposit some Ethereum, and then you earn interest on that Ethereum that you deposited, and you can also use it as collateral, borrow USDC. Then you can take that USDC and do whatever you want with it. You can gain exposure to another asset. You can provide liquidity. You can stake something. You can do whatever you want with that funding. Gives you a lot of flexibility. But not only does it give you flexibility, it also enables you to hold on to your Ethereum. There's nothing like that on Zill. So, if you want to earn yield on your Zill, you can stake it. You can earn, I don't know what it is exactly right now, maybe 13 or so percent annually, which is not bad. But you have a 14-day unbonding period, so you have to wait. And when you want to access your Zill again, you can't do it for a couple weeks, and you're not earning yield during that time. The only other way to earn yield on your Zill is to provide liquidity, on ZillSwap, and earn these fees. But the problem is that you're then subject to impermanent loss. I'm not going to go deep into impermanent loss here, but it's risky. You can lose money if the price of the two assets that you are providing liquidity on go in different directions. If one dumps, or even if it pumps, it's going to drag you down, and it can cause some losses. So providing liquidity is a pretty risky way of gaining exposure or earning yield while having exposure to this ecosystem. On the other hand, if there were a money market on Zill where you could deposit some Zill, or you could deposit some WBTC or some Tether or whatever it might be, you can then earn some yield on that. You can borrow against it, so you're maintaining your core position, but you're still gaining some liquidity that then you can deploy in the ecosystem to gain exposure to another asset, or to do whatever you want to do with it. That would provide a lot more flexibility in the Zill ecosystem. There are a lot of DeFi enthusiasts, farmers, who are just not going to come into an ecosystem where they don't see a money market. They're going to go where the money markets are. And as long as this is the case for Zill, the total value locked is going to remain limited. If there were a functioning money market on Zill, especially one that had anywhere near the level of flexibility of Aave with all of the different assets that it has functionality for, that might be a tall order. There are plenty of other money markets on different ecosystems that on different chains that don't have that many options, and that still facilitate DeFi activity on those chains. So until Zill gets on that bandwagon, it's going to remain limited. But if a money market comes along for Zill, and I think we would see TVL explode. I think that would be a huge draw in for people, because it would then make it a more viable strategy for yield farmers, for people who want to use DeFi to increase their stack through strategic yield-bearing activities. That's what Zill needs. Zill needs a money market. There was an attempt at this. Pillar Protocol was supposedly coming along, and it was going to provide borrowing and lending, focused on Zill and also on gZill, which is the governance token for the Zill blockchain, which is also underperformed. That hasn't really panned out. I don't really know what happened to Pillar Protocol. It didn't really pan out. And so Zill remains in the same situation that it's been in, which is that there's no functioning borrowing and lending protocol, which means that the decentralized exchange and the yield activities on the exchange are limited, are not that appealing to people who have many other options on other chains. And I think that's the issue here. So marketing is not the problem. Zill's marketing is fine. Zill actually has better marketing, in my opinion, than some other chains. It has a very good design team. It's aesthetically pleasing. It's fast. They've partnered, with football players or soccer players. If you're American like me, they're out there too. And I don't think it's any less, certainly not obviously less good marketing than lots of other chains out there. That's not it. That's not the problem. The problem is that the DeFi ecosystem is too limited to draw in a lot of total value locked. If that happens, it's going to pull in some money. then it's going to give Zilliqa a fighting chance. So instead of commenting on Amrit Kumar's tweets or whoever else's by asking when marketing, ask when money market. That's all I got for you guys. See you next time.